I think, Kelly, I think it's telling that the stock rallied after cutting that profit outlook last month. After the initial negative reaction, shares were quickly picked up in the trading session. I think there does indicate there's some resilience in the share price. I think you can squeeze out some more upside because of it. The level I'm watching is the gap in the share price caused by the when they reported in May. It comes in at around 344. The 200-day moving average is also there. So there is some formidable upside resistance on the upside. I think generally it's more of a market performer. I think the market is going to be moving away from a lot of these safety stocks, but it could participate for now. And as long as it maintains above its 50-day average, which currently comes in at 126. So not a sell right now, but I think we can get there over the coming weeks.
You almost sound like you're range bound on this. Like it's going to kind of be a 126 to 140. I mean, is that right? Would neutral be the best word to describe your thoughts on it here?
That's great. And thank you for correcting on that level at 140, marking the gap in the 200-day average there. Market performer, range bound, it just doesn't get excited. I think it does have the tailwind of a strong market here, but there's some high conviction ideas elsewhere as it stands.
Quick final follow up, because you said you don't think names like this are going to do as well in this market. What do you mean by that?
I think macro trends support a growth-led recovery. As interest rates have topped and we've seen a lot of these high growth areas find their footing, against the backdrop of long duration bond yields that are still moderating and yield curves that are flattening, I think this is going to be growthier. Technology and healthcare pockets of the market should continue to lead markets higher, while safety not necessarily at risk to break down, but I think these other areas more likely to catch up.
All right. Very, very interesting. Walmart around a 22 times forward PE. A lot hanging on this report, as we've learned the last couple of quarters. Let's turn to Home Depot now, which also reports in the morning. Slightly lower today, but up 4%. Get this Home Depot performance. Up 4% this month. Fourth positive month in 5. It's beaten earnings 19 out of the past 20 quarters. And last quarter actually raised its profit outlook. Melissa, what am I missing?
Well, Home Depot, of course, has seen a huge boom in business during the pandemic. And the real question now is, can that demand keep going in this much more challenging environment where consumers are feeling pinched in some ways from inflation, but also they're spending in different ways. They might be going on vacation rather than painting their house or redoing the kitchen. But Home Depot is somewhat insulated from shifts in consumer spending because it has a strong professional business. So about 45% of its sales come from home pros like electricians and contractors. And that may help it in this environment because those people tend to be steadier customers. And so if there still is demand for home projects, then it could hold up despite consumers maybe not tackling the do-it-yourself projects like they were months ago.
And Melissa, I noticed last week lumber prices were soaring, 22%, but they're still well off their highs. So I don't know if you've seen any sort of hints from the broader supplier landscape about what might be going on here.
Commodity prices are definitely one to watch, but with the pro business, they're able to pass on those costs sometimes to consumers because if you're doing a home renovation, you may not see how much more that lumber is costing you because you're not buying it yourself. And you're doing these projects, very sporadically rather than doing them, buying them every day. Like with Walmart, you're buying milk and eggs all the time. But when you're tackling a home project and the contractor is giving you a quote, you may not think as much about the inflated price.
Great point. All right, Ari, what do you do with Home Depot here?
Here's another stock that I think should be traded higher. It does exemplify the recovery that we're seeing for lows. This is more of I like Home Depot. Don't think I necessarily love it, but it should trade higher. I think what's notable in the stock price is that it moved above its 50-day average in July for the first time since collapsing below it in January. So that is indicative of the incremental positives that we're seeing develop in the stock's trend. The level I'm watching on the upside is 344. Again, this marked a gap in the share price from February. It fell below it. Very often those gaps can then become resistance on the way back up. But again, with support at the 50-day average at 293, again, I think the recovery continues to play out in this stock price, too. So
we see the year-to-date chart so telling on this one is kind of like a straight line down to early summer and then this rebound. You think that rally can remain intact here for, the near 6-month term, let's call it?
Yeah, consider that really the key negative here was that the entire market was falling apart in the first half of the year. So that top-down headwind's been removed. I think the overall market is basing, and with that, you do have stronger market conditions that should support a stock like Home Depot, and you're seeing it in the stock price as well, now starting to reverse higher. Some hurdles still in the way in terms of resistance, but the development is that recovery is slowly starting to be shown in the stock price.
All right. I feel ready. I feel ready for these reports in the morning. Thank you both, Ari Wald and our Melissa Repko today.